and welcome to yet another episode of YPO Presents. I'm Ekaterina Walter, Marketing Director at YPO, and today we have a privilege of speaking with two YPO members, Florian Kemmerich and Bridgit Lombard. Now, Bridgit is a business leader who has grown and successfully sold 4 middle market companies. Since selling her last business, Nathan Sports, Bridgit has turned her focus, energy, and passion into bringing people together to creatively solve some of our world's greatest challenges. She has been actively involved in developing sustainable conservation models in Eastern Africa, pioneered a fund of girls' education in Kenya, studied mindfulness in society overall with His Holiness the Dalai Lama, and developed a minority-led investment platform. And now she's mentoring early-stage entrepreneurs while helping shape the global movement in utilizing business as a force for social good. Bridgit, welcome.
Thank you.
Florian is a managing partner at Bamboo Capital Partners, an entrepreneur and impact investor with extensive background on fundraising, business transformation, and social leadership. He collaborates with the World Bank, United Nations, NGOs, governments, as well as private and institutional investors to fund, back, and scale companies in the world's most remote locations. Florian, great to have you with us today.
Very likewise. Great pleasure.
All right, so before we get started, we'd like to remind you all, whoever is watching us live, to ask our guests questions by posting them in the comment section below. And if you're not following us already, please do so you can receive notifications when our next episode begins. Now, down to the actual topic and the reason why we're here. So, Bridgit, let's start with basics. Tell us, what is impact investing?
Sure. So impact investing, the actual definition by GIN, which is the Global Impact Investing Network, is investments made with the intention to generate positive, measurable, social and environmental impact alongside a financial return. And I believe that that's a key component. So for the last decade, investors have been slowly working to mobilize capital investments to reach more positive ends through impact investing. And within this realm, investors utilize ESG, so environmental, social, and governance criteria. I think, it is really important to note here that it is alongside a financial return. And along with this very general definition, there's a variety of lenses that can be used under the umbrella of impact investing. This can include gender equality and gender equity, climate consciousness, education empowerment. And this is also applied to myriad of sectors within the international economy, such as healthcare, finance, agriculture, renewable energy, and housing. And the last thing that I'd say here is that there are 3 characteristics of impact investing that really reveal all of the nuances within this field. The first one is intentionality or intention of the investor to create a positive social impact. So that's key. The second one is financial returns, which I've spoken about. Investors focusing on impact investing, generating and expecting positive financial returns. And the third one, which can be a little bit tough to determine and can really be a controversial topic at times, is the measurement of the impact on the world. And so really it's those 3 key characteristics that would define impact investing.
Florian, anything to add here?
Well, from an impact investor point of view, sometimes psychology is important to take into account here. For example, generally we would say either you make money or you do good. You wouldn't do both things at the same time. And that's actually the intention with impact investing, is to do both things at the same time. You measure the financial returns and you measure what's happening on the ground. So therefore, it is difficult sometimes when you talk to an investor saying you would like to do impact investing. They say, okay, but you are rather, on the social side. So probably it's not about returns financially. And yes, it is. On the other side, you would have a philanthropist saying, okay, you say you do good, but it's not really, because at the end, it's really about the money. So that is a pitfall. Very often as impact investors in the past have been trapped in between the 2 chairs of either make money or do good. And I think it has been proven and is proving, as impact investing is going really mainstream, much larger dollars too, that you can do both things at the same time, and that actually doing good might actually be a value you can charge for. and you can do more with, whether it's sustainability, whether it's organic food, whether it's renewable energy. So there are many aspects to it, but the important part is not to be confused, neither with philanthropy nor with pure for-profit investments.
Interesting. So then, Bridgit, tell me, who's making impact investments, and what is the size of the market and the financial performance relative to expectation? Talk to us a little bit about that.
Sure. Well, to Florian's point here, there really is, a wide variety here, and not to get segmented, but we're looking at financial institutions, private foundations, pension funds, NGOs, individual investors. As an example, from an NGO standpoint, the American Cancer Society created Bright Edge, which is the philanthropic impact fund of the American Cancer Society. And on the private sector, just one example, Larry Fink, the CEO of BlackRock, the world's largest investment firm, he wrote in his annual letter that every company must not only deliver financial performance, but also show how it makes a positive contribution to society. And there are many other examples here of, on the private side, where impact investing is really gaining momentum. I don't think any of us 10 years ago would have thought that this would be a household term, but there's been a sea change here in terms of the attention that it's getting from media, from press, from investors, individuals. And I love that there's now a confluence between philanthropic and private efforts. They're both recognizing that together they can be more powerful than separate. And of course, they are very distinct in their mission and what they're trying to achieve. But through impact investing, we can come together and create outstanding returns for society, for our environment, and financially as well. In terms of the size of the market, it is now about $500 billion, and that's actually doubled since 2017. That just blows my mind. So obviously, the traditional beliefs that social good and financial returns are mutually exclusive or parasitical, that's being disproven. And it's being disproven by research from some of the world's largest and most respected organizations and institutions. And I believe you asked about financial performance as well. Well, it's relative to expectations, as with any investment, I would say. Investors do have diversified financial return expectations for sure. Some intentionally invest below market rate returns in line with their strategic priorities, while others pursue market-bearing returns. What I can tell you is the GIN, the Global Impact Investing Network, in 2017 conducted a survey, and that reported that 91% of impact investors are outperforming or in line with their financial performance expectations. So as we can see, again, to Florian's point here, that by doing good, we can also do well.
Well, Florian, you've been focused on this space to close to 15 years, right? Why has it all of a sudden became a bigger deal?
So first of all, it's not me, myself, because I actually personally invested and joined the company I'm, have the pleasure to be part of. And actually my partner, Jean-Philippe, who was created before the Bamboo Capital, another impact investing firm about 20 years ago. Really, it's a longer journey. But I'm probably, the results of a thought process some 4 or 5, 6 years ago when I learned about impact investing, is that possibility to intentionally direct your money on specific outcome. And I personally have a longer history, years back, but where I was doing a lot of philanthropy also, and I created actually a foundation in Latin America serving the indigenous population in the jungle. And I saw that, free money very often keeps poor people poor because it doesn't create infrastructure. You can show up, you feel good, but it doesn't really do what you want to do on the ground. So for my experience was then it's not less about me, it has to be more about the others. Yeah, the infrastructure you can create. Now, when we look at what we're doing is our focus is really on creating wealth. So it's poverty uplift, it's migration mitigation, it's livelihood, but it also touches other areas like food security because we really focused on the frontier markets and like to go rural. But also our ethos is that the wealth of a nation is defined by its middle class. and it's defined by its SMEs. And you can see that now in today's world, where the rich countries are opening the floodgates, to save SMEs. This is where you really have to invest in. So it's a little bit taking this old sentence saying, don't give people fish, teach them how to fish. I would even go much further, invest in their fishing business. And I think there's the creation of tendencies you have now, technology coming in and providing data and visibility. Also the request for purpose, especially from the millennials moving, but as the money moves from the baby boomers to the millennials, asking for purpose, saying, okay, you use my money, but what does it do? Does it harm the planet, or does it actually help the planet? And the third one is also that you can see the conversion of the grant giving, understanding that free money doesn't help, but you can go sustainable and double down. And on the other side, you can see the for-profit saying, if I can invest in renewable energy, why would I invest in oil and gas, for example? And that trend makes that suddenly impact investing, which sometimes is very differently interpreted and also lived, because it can be done in the frontier markets like we do, or in the developed world also, because there are different areas. But the intention is that you intentionally trigger a change, sustainably. And that's a little bit what Bridgit was saying before, that now numbers show, and numbers have proven that there is no trade-off. There's a risk-reward scenario. And depending where you invest, and you can have very, very safe bets in impact investing on renewable energy, on solar plants, for example, where you know exactly what you're getting, and they do not just rely anymore on subsidies from the government, but really are sustainable business plans behind, and you can make money and returns. Or you can go much more riskier, like we would go for, to support SMEs in the frontier markets.
Well, we have a question from the audience. Carrie is asking, is there a generational difference between who is interested in impact investing? Is it Gen X, millennials, baby boomers? What are you seeing out there?
Well, I would jump in and say that something that certainly brightens my day is I don't necessarily see a huge gap. And to Florian's point, obviously, millennials are a little bit more aware and conscious of social enterprise, if you will, and where their money is going. But I would like to point out that even private institutions and family offices, ultra high net worth, UBS, which is a Swiss financial institution, they've committed to investing at least $5 billion of private client assets, which spans generations. So I do believe that as we come together as a society and recognize that where we spend our dollars, where we put our energy, and what we vote for has an impact on our world, and how could we not, particularly with what's happening in today's circumstances. So I believe that impact investing, there really isn't a divide here, but it's a unifying philosophy on how we can use capital to really address some of the challenges in our world. Florian, would you say anything differently?
I fully agree. Now, if we understand that we are in the fourth industrial revolution, everybody is connected and everybody gets information, fake news or real news, facts are getting blurred, even though you have much more information at hand. The storytelling is increasing. Yeah, so there's also, there's some danger by storytelling. You just run after a story, but at the end might not be what you really intended to do. But in that sense is that the millennials also, to my understanding, is not a new breed. They just, grew up with the device in hand, so that information is there, and everything gets magnified. More information, whether right or wrong, it's magnified, and also that magnifies your concerns. So you want to do a difference, and this is of course one of the forces in impact investing. But also impact investing is not an asset class. You can, in each asset class, you can do impact investing or not. Very often it's also confused, let's say the confusion between social responsible investing, ESG, environmental, social, and governance, and really impact, where you want to scale. You want to scale certain things. So in that sense, Bridgit, I fully agree to you that that you can find flavors for everybody to do. Now, if you take the example of UBS, of course, UBS might do very little in private equity, frontier markets, and rural spaces, but much more in, the more mainstream market, which is good and great. Yeah, but you can see there are different ways. So if your interest is in supporting something, you can start very little, or you can really go into very safe financial investments, understanding that what you do has a purpose, and it should also give you the information about what it does on the ground, not just financially, but also from the theory of change.
Bridgit, you've been impact investing in some form for a decade, right? And worked with leading bodies in this space. What would you say has shifted in terms of returns, time horizons, types of investments? Any significant shifts?
Oh, sure. Certainly some shifts. And what I would start with is, just to piggyback on Florian's point here, the idea of investing with intention beyond financial return, this isn't anything new. And so, again, this is a unifying concept that's been around for quite some time. In fact, faith-based organizations have been investing in accordance with their values for decades. As far as we know, it could even be longer. What I will say that's changed in terms of impact investing is that it is growing exponentially. We've talked about this a little bit, but in recent years, impact investing has developed into a tool. So again, to Florian's point, it's not about an asset class. It's really a tool for companies to support entrepreneurs, to further social goals, to reach comparable financial returns on investments, and to really scale and impact and change our world for the better. Over the past 10 to 15 years, as I said, we've seen it blossom. One thing that I have noticed is that we've seen a number of business plan competitions, fellowship programs, other networks have been popping up to support companies, communities, entrepreneurs that are driven by a social mission. We can look at Unreasonable East Africa, we can look at Spring Accelerator. So I would say one big shift has been the amount of support and the community and the network that has been built. The second thing is the type and the number of investments. Again, to Florian's point here, from public equities all the way to a donor advised fund, impact investing can be done. So again, it's not just an asset class, and I believe that there is more understanding of how to make an impact across your portfolio. In terms of types of transactions, we are seeing a lot more direct investments. I personally look at a few a week. I'm seeing this area heat up. And in terms of issue areas, I have seen a shift now to really more attention, awareness, particularly around climate change. The SDGs, if any of you are familiar with those, that really changed the game and helped really create some clarity and focus on the issues that we face globally. And I'd say that was one impetus for impact investing and doing so alongside of values, alongside the type of impact that we're looking to make in the world. But climate change, and certainly currently due to circumstances today, healthcare is of much greater interest. So certainly seen a shift in the types of investments, the number, and where they're being placed.
Florian, from your perspective, what has been the biggest change you've seen?
I think a little bit also building on what Bridgit said here. Major drivers are, as I said before, is technology, especially when we talk in our words, when you go into rural areas, remote people living remotely, technology has changed. So there was the cell phone is a major technology tsunami, and the mobile money is now going on. From the mobile money, it goes to distributed energy. And after that, basically, you're ending up with a connected household, with financing mechanisms, all data-driven. And suddenly you can participate on IoT, on the productivity. So that's a major change. That's number one. The second part is that non-for-profit organizations understand that when they allocate their money, not just as a one-off grant, but really to put it to de-risk in a fund or in a structure or as a technical assistant towards creating or investing to attracting others, that's a major change. And the third part also is to understand that then the for-profit investors, if they go into impact investing, it is not that is philanthropy, it is not concessional returns, but you can actually structure or have coexisting, even collaborating different type of investors in the same vehicles for impact on the ground and achieve the returns for the investors. And this is really an amazing time. I mean, Bridgit, you talk about the SDGs, the United Nations Sustainable Development Goals. I mean, when they came out, of course, we were looking rather as a marketing tool. Now you can put labels to the stuff we're doing anyway. And it's even much more. We've learned more because behind the SDG, even a single SDG, they're actually action items and things you can do. So we've really embedded it into and looked at and analyzed our data and what has been doing on the ground because it communicates better what we're doing. So that's another value driver. So therefore, in today's world, we're collaborating with United Nations, different agencies on the ground with them. We're collaborating with NGOs, like Care USA, for example. We're collaborating with different governments on the grant giving side by seeding it. And we're collaborating with the normal, regular for-profit investors, which is the ones Bridgit was mentioning before, whether it's private wealth, whether it's institutional investors, and so on. So it's a very exciting time where there's a major pivot because this is now really scalable. And therefore, things can be resolved. Now, back to what you were saying actually on the title of it, Beyond COVID. COVID is actually not hindering what we're doing, is actually accelerating. Because people have time to, to think about what I'm doing, what is happening. We have also seen the major change on giving Mother Earth a break. Yeah, everybody confined and dropping down pollution. But also you've seen the other, maybe negative side, everybody wearing a mask now, throwing it away, and wrapping now things in plastics. But again, beyond that effect, what is happening is that people make a reflection and saying, hold a second, if I'm not just chasing my private wealth and my money, whether, what my return is, but I do not take into account, how to resolve the problems of the earth, which might be a pandemic like this one, but also other challenging of the world. I think this is the beauty, actually, that this is a trigger for many people to think beyond the pure own financial situation, maybe because some of them, they're under threat, maybe because others, they are rethinking models. So it's a very interesting time and conversation we're having, actually, during the confinement here, talking to all of you from home.
Well, that's interesting. So Bridgit, building on what Florian just said about sort of current situation with COVID and how it affects the space, any additional thoughts on that?
Well, I agree with Florian that it's certainly accelerating the awareness around making sure that we have complete transparency into where our capital is going, and to really take a long, hard look at where we can mitigate some challenges like this moving forward. And we do have the power as individual investors, as CEOs, as folks who are contributing to society. Again, what I've seen here is really more and more organizations like Leapfrog Investments, as an example. They invested in an organization in sub-Saharan South Africa. And this is an organization that provides life insurance for low-income, vulnerable people here in Asia and in Africa. And I would say that the investment there was really around taking a look at, is this a viable business model, but also, what is the community that's being served? Is this needed? Is it distinct? And I think with COVID, we will see more and more investors and investment vehicles and funds taking a look at health, well-being, and again, how we can mitigate some of these circumstances. So the examples are already out there. I expect this situation to really accelerate the dollars being put towards good.
Florian, you invest exclusively in developing countries to serve the low-income population. To what extent is the current COVID crisis affecting them?
Oh, it definitely is. Now we will see, and there's a lag time, as maybe in some of the countries, the pivot point is done in terms of the increase of, contagious people and also the death rates. Now in the rich countries, it is first of all a health crisis. How much can the healthcare, keep up with the people going to the ICUs? And then, of course, the economic crisis, which is a very strong one. And you can see also that the governments are opening their floodgates to save mainly SMEs, because they would be wiped out. The big groups, of course, can reshovel, and you have some loans and some support. But this is just two. The third one, and this is when you listen to all experts, even the United Nations, clearly stating it is for the unprivileged and marginated population of the world, this is a humanitarian crisis. Because you cannot confine someone who's making his living day by day or week by week, for whatever, 2 months at home or 3. And you wouldn't have the same financial mechanisms of wiring some helicopter money, through a bank account, because they don't have it. So therefore, life goes on. They cannot just stop, and therefore the exposure is higher. So therefore, this is a really tough time. And it's not on the mainstream media. It's not the big names. It's not the ones, shouting out and being heard. It's things happening on the ground in the emerging world, where also the so-called MSMEs, the micro, small, and mid-sized enterprises, are really under heavy threat. And we have that with YPO is talking to, through different regions from emerging markets, because, we're very close with them. It's a very, very challenging time. And it's not just something the government can bail that population out. So therefore, the urgency and the emergency of doing something and doubling down and help, maybe first on the health side, if we can, but really, really financially, much more. It's devastating because in these countries, very often, the elderly people population, demographic-wise, is of course smaller. Therefore, it's younger generations. So therefore, it's maybe less a problem of life or death, but it's really a problem of eating or not. And as the UN said, they're foreseeing a rise in extreme poverty, which has been decreasing over the last 10, 15 years constantly in the world, to take an uptake. And that is something which doesn't stop at the border, because this has an influence on pressures, on uprisals, on mass migration. So it's something we should be all concerned and do something about it.
Agreed. Now, Bridgit, what advice would you give fellow leaders and global chief executives regarding impact investment? What should they consider? What should they be looking out for? Talk to us about that.
Sure. Well, I think the first thing to consider is the investment horizon. Impact projects by nature tend to need longer development cycles to be able to come to fruition. So investors must think about, what is your risk tolerance? What is your time horizon? The market, as it has existed for centuries now, punishes or rewards stocks based on whether they can meet or beat earnings. And impact projects involve oftentimes upfront costs with the benefits occurring and accruing over the long term. So I would say, one, investors need to be patient. Secondly, I would ensure that one is looking at the sustainability and scalability of a company, so the actual business model. And again, in a survey of global impact investors, the two areas of greatest concern would be business model and management. And so I'd say really understand the scalability and sustainability, and be careful not to rely solely on intent. That's where we can get into some trouble. While intent is wonderful, in order to have the greatest impact, we've got to be able to have a structurally sound business model and operating business. I would also say co-investing. That was really important for me. That way I could start to learn, share resources. So co-investing was important. And lastly, getting clear on my values and tolerance levels for a variety of issues. So when I'm looking at an investment, what is it that I'm willing to move on and what am I not? And so, that started for me 15, 20 years ago with exclusionary investing. And now really, when I look at my own personal investments and placements, it's really on the spectrum of what are my values, what are the issue areas I care most about. And so getting clear on that was helpful for me.
Thank you. Florian, what would your advice be?
So first of all, running a business, whatever the business is, whichever sector or its geography or customers you're serving, you can always think through. I think the first step is not to look at shareholder value, but a stakeholder value, because by widening the scope, you include your employees, you include suppliers, you include all the ecosystems, maybe even the community and family behind. So that's number one. So it's a core value shift. Still doing the same what you want to do, because that's a possibility where you start thinking about using business as a force for good. Impact investing would be capital as a force for good. So the second one is, if you now think about when you reposition what you do, maybe do the same, you can recognize that you might actually have incremental margins and higher prices. So as you go in the food industry, maybe to organic food, or as you go migrate in the energy sector into clean energy, renewable energies, if you go into whatever, in real estate, into sustainable real estate, you can very often price higher because the perceived value is higher. So that's an addition. It's not something, a cost you're carrying. And that also makes then you think about to maybe when you look for an investor for your company, somebody to invest in, you would consider impact investing, because the impact investor is not just providing capital for you on pure financial returns. It is still the case. And private equity is private equity. And they sit on the board, as any equity. However, the collaboration you have and the shift is that you can increase the perceived value of your business model, of your returns, by going that pathway. So I could invite any CEO or business owner to really think about and think through, when doing what you do daily on your product, is how you can position yourself, how you can increase your perceived value by using the tools, as Bridgit says here, the impact investing toolbox of social, of ESG, of all the possibilities you have. It's a good guidance. SDGs also are some levers to look at and to use that toolbox to increase and drive your perceived value, and at the end also therefore your profitability and also in the business model you're doing.
Okay, well, thank you, Florian. Well, I would like to close with a fun question, because Bridgit, I have to ask about His Holiness the Dalai Lama. What is your fondest memory from meeting him?
Oh, well, there's so many, as you can imagine. I would say I was in Belgium and had the opportunity to be in a relatively intimate audience with His Holiness a few years back. And what I was struck by and what I came away with was his endless capacity for compassion, paired with his relentless pursuit of scientific data and knowledge. And so I've never seen the ability to be able to pair spirituality with science, varying perspectives, and bringing it all together, again, relentlessly, to really leave our world a better place. I will tell you one brief story. We were finishing a session and His Holiness was going for lunch. And so the area where he walks out is roped off. And so we all stand alongside, and most of us, bow and put our hands in prayer position. And so I did so. And little did I know, he came over, grabbed my head in his hands, cupped my chin, lifted my chin up, and made me look him in the eyes, started giggling. And really that was a reminder that we are all one and we all have power. And so his humility to me is something that will remain with me. And it's also a reminder that I, as one human being, can make a difference.
Well, thank you. Thank you, Bridgit and Florian, for joining us today. And thank you for those who tuned in. It was a pleasure to have this conversation with you. And viewers, if you enjoyed today's episode, let us know by sharing it with your networks and subscribing to our channels. Until next time, this is YPO Presents.